Hey everyone, it's Daywanette, and I kind of wanted to break something down because I saw a post earlier and it's a little bit misleading. And basically, it was talking about how IULs are a scam and how recently Kyle Busch had some bad experience with it. So basically, I'm going to go over this. What an IUL is, okay? So, an indexed universal life, or IUL, policy is a form of permanent life insurance that combines 1. A death benefit like traditional life insurance or term life insurance, and 2. A cash value account that grows based on the performance of a market index like the S&P 500. However, unlike directly investing in the market, the IUL doesn't actually put your money into stocks. Instead, the insurer credits interest to your policy based on index performance, subject to a cap, the max you can earn, for example, 10 to 12%, or a floor, often 0%, meaning you don't lose money when the market drops. So it is a safer way to invest, but that's the selling point. Growth potential without market loss exposure. Yes, I said that. How IULs can be powerful when structured properly is that they can become tax advantages. Growth is tax deferred, and you can borrow against the cash value tax-free via policy loans. No market loss. Your value doesn't drop with a market downturn. Just no gains in that year. So if there's no interest increase, you're just not going to gain any interest on your investment, but it's going to stay where it's at, maintainable. Flexible contributions, you can adjust premiums within IRS limits, and wealth building leverage. Properly funded, they can act as a private bank for business owners or high earners to borrow from their own money. Yes, I said that. You're not paying interest rates to a large entity like a bank or anyone else. That's why these companies like Universal Wealth, whom I work for, emphasize them for wealth strategies. They can be a legitimate tool for tax-free retirement income or legacy planning. So, where the criticism comes from, let's break this down. The posts that I looked at shared highlights of real risks, but they're often due to poor policy design, bad sales practices, or unrealistic illustrations, not the IUL itself. Common issues are typically high internal costs. That means people try to... I lost my notes. Sorry guys. Okay, so early policy years have high insurance expenses. Underfunding, if clients don't overfund the cash value and they don't put the max allowable amount in, the policy can implode later. Loans are misunderstood sometimes. Borrowing too much aggressively or without monitoring can drain the policy, and then marketing hype. Some agents oversell them as investment replacements, which they are not. So yes, lawsuits and complaints do exist, but mostly from misrepresentation or mismanagement, not inherent fraud. About the Kyle Busch story, let's go into that first. There's no credible evidence of Kyle Busch losing $8.5 million in an IUL scheme. Posts like that are often clickbait, circulated by financial advisors who oppose permanent life insurance and promote term-only strategies. I can confirm that after checking reputable financial news, there's no record of such a case. Bottom line, IULs aren't scams, but they are complex tools that must be designed and funded correctly. They work best for high earners with consistent cash flow, business owners looking for tax-advantaged growth, and families wanting lifelong coverage with wealth accumulation. They're not ideal for people who can't fund them consistently. Clients expecting investment level returns without risk. So that's where we're at. Hope you enjoyed it. If you have questions, give me a call. I am teamed up with some of the best life insurance agents in the area. Well, nationwide, honestly. So give me a call and let's go over some options for you.